Hey, this is Jack from Alpha Charts with a long view monthly review, I should call video. Today is February 28th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Okay, this is the monthly review. Today is the last day of February 28th, February 28th, 2023. And so just like leg day, we cannot skip our monthly review. Let's get going. We're going to do three parts of this like we normally do. Look at the major indexes, look at each sector ETF, and looked at the highest cap weighted names, the top 20 cap weighted names, and just see what it says. Again, I have not looked at these yet, so we'll be looking at them with you, and I'm going to take some notes as we go along to see what is bullish, what is bearish. Okay, so starting here with the Dow Jones Industrial, we have you know, a kind of a basey look to this, but again, we don't know if this is going to be a rejection over here and it comes back down, or if this is some sort of inverse head and shoulders on the monthly, right? Got boom, you got head here, shoulder here, head here, and maybe a shoulder here. We'll see if it plays out or not. Again, lower volume on this past month, but it's a couple of less days as well, so that could be rolling in. So again, it's a base look to it, but we don't know if this is gonna reject here or not. So it's definitely unsure right now, right? That's the best I can say. Let's keep going. So SPX, again, very similar look. Hard to see that. But you got this shoulder here, you got the head here, and maybe a shoulder here. You also have a VWAP pinch happening. You see that in the monthly as well, from the high point of this month and the lowest point on this month. And you see this bar almost engulfed, like literally almost went end to end on this VWAP, right? And so again, where this pinch moves, whether it goes up or down from here, I think that the larger move will be there as well. Again, this could be almost like a B, and then maybe one more move down to a C. That's a possibility here. But again, we have to break this VWAP at 39.20 for that to happen. So SPX, again, it's in between the pinch. Next month we'll probably know which way it broke, right? Most likely. NDX, this is the NASDAQ. So let's see, I had some prior stuff on here. So we'll see. So here is from the 2010 basically channel. And you see it busted out of here. Now we're back in the channel. And it looks like so far this channel is holding. So that's a positive, right? We'll see if it continues or not. But this channel, it's kind of a Browning channel, kind of, but it's touched numerous times along the way. Maybe you can even do that, right? Because there's a whole bunch of touches right there. And so that may actually work out better, make it more accurate. But again, if this channel breaks, that could get real nasty. And then you could say, well, then maybe this trend line from 85 comes into play and it could, potentially touch it down here. That would be a giant move lower, right? I mean, that's kind of crazy, actually. With that, I mean, it's not out of the question, right? Nothing's ever out of the question, but that would be a gigantic move lower. So that would be a really dangerous look to the market, right? We're not there yet, though, so I don't want to, get out of hand with this. But if this blue line breaks, there's a lot of space here. There's a lot of space here, so we want this blue line to hold. IWM, the 200-day is flat now. Obviously, I put it there. I don't have it on this chart, but here's the VWAP from the top, and so far, price is not able to get back up above it. Right? It tried to, but on the monthly, it got rejected, and this was a failed move higher on this monthly. So again, this could be, an A, B, and then potentially C, right? That's possible. Just wondering what the measured move is from here to here. 33.26. And let's just see what the measured move is here. Well, would you look at that, right? So measured move wise, that makes sense. So watch out for the ABC move. That would be, 33% lower from here. That's a possibility, right? So again, it would have to break 163 for that to happen. And we haven't seen that yet. But if it does break 163, I think, this 130-ish area, whatever you want to call that, somewhere around here, would be in play. So just be careful of that, right? Just mark you as tenuous. Now, again, if we get above 200, then it's a different story. But we have to be aware of that ABC pattern that could be playing out, and we may be A, B, and then C at some point in the future. All right, so there's the indexes, and that okay. So it was kind of a mixed bag there on the monthly charts. It could go either way, and a lot of indecision. But I saw a lot of ABC patterns potentially in play there. We'll probably know better next month. Let's look at the individual sectors. So here is energy, XLE, and it couldn't move higher here, got rejected. And we'll see if that, this is a major spot, right? This 91, 97, 95-ish area, big spot. And so we had a pretty good size rejection, down 7% for the month. We are seeing it moving, lower volume as it's coming into air, and we'll see where it lasts. I can easily say that this on the monthly chart is a big time area, right? So maybe it comes down to around 80 or so, and then we'll see if it finds support there, right? You can also see on the monthly how this got kind of, I always look for these kind of like these broadening formations, right? Megaphone patterns, whatever you want to call them. And so you can see how price action got kind of loose up here. And so that's not really conducive to a move higher. If it could tighten up and move higher at that point, then that's good. But yeah, it just got loose and wild. So XLE, nothing special to see there. It probably could move lower. XLF. So XLF held where it had to. Here was the 07 high, and it touched it there in 2018, also in 2020. And now you can see what did it do here. So it kind of came back, held what was prior resistance, now became support, and we'll see if it moves higher or not, right? Has, kind of like we'll call it a complex inverse head and shoulders kind of basic format. But again, it could easily go up and it could easily go down, right? And there's your ABC pattern. So this can go either way at this point. There's nothing that says it has to go up. And again, we can move sideways even more, very indecision. This failed move higher. And we're seeing this now a couple of times where it tried to push higher, couldn't, and push lower. And I know the strat people use this quite a bit. That's an ugly look, okay? That's a very dangerous look. That tells me that the buyers are tired, and we may see some selling coming through. Time will tell. But XLF, not my most favorite chart either. XLI, industrials. Yeah, see, the moves higher, couldn't, and then sold back down. Again, not a great look. Hasn't done anything wrong yet, right? It hasn't done anything wrong, but tried to push and couldn't. See how just like this. See how it tried to push higher and couldn't, and then what do we get the next month? Down. That's usually not a great sign, right? Not a great sign. So right here, see how it tried to push higher, couldn't. Next month down, and we actually had 2 pretty rough months down, right? That was COVID right there. So again, I don't like the looks of that. I don't like the looks of this. Don't like the looks of that. That's XLI Industrials, XLK. There's your trend line. Very easy to see in XLK. Obviously, price is trying to move out of there. Couldn't quite, it's right there. However thick you want to make this line will matter. Again, there's your A, B, potentially C. And again, in technology, let's look at what the measured move would be. That's 36%. Back to this area, that's 50% move, right? So that goes in line, a 50% move in XLK goes in line with that 50% move in the NDX, that would be and right here, the 2000 highs, that would retouch that. And again, that's a pretty significant. Of course, it's a huge move, right? And I'm not saying that's going to happen, but what I'm saying is that needs to be in the realm of possibility at this point. Okay, let's not pretend like that's not a possibility. Again, A, B, C. Again, it's not. It's more than a measured movement. Sometimes it happens, right? But that's a possibility. So let's keep an open mind to both sides, the bull and the bear case. And right now, again, seeing all these wicks right here, again, I have to lean a little bit bearish there if I'm seeing these wicks, because that's a lot of selling pressure. XLV, 3 months down. And again, even though this was a shorter month, you see on increased volume right there. So that was pretty significant. So you see this top, and now this is maybe some kind of double top that's forming. And you could say that this is, you see this is pretty significant right there, this 124 area, right? That's pretty significant. Then coming down further, 118, right? So those are two big levels right there. Monthly charts are really nice because you can see these levels going back for, a year or more and seeing where they're at. Healthcare doesn't look so hot, right? Not so hot. XLY. I'm trying to find something positive here. Here's XLY. Big wick down. I mean, a good candle. I mean, on higher volume, right? Big wick down, big wick down. Don't like that. Then you had kind of this, indecision candle that wasn't much of a pop back, right? Another, spitting top type of thing. And then nasty. I don't like the looks of this at all. I wouldn't be shocked at all if 123 gets tested again. Like that would be, like, I'd expect that almost. Let's see, XLC. Man, look at that wick. There's a VWAP from XLC. And again, everyone was like, oh, look at Google, look at Meta, right? Those are the two big ones. And again, had a great month here, 14, 15%. If you were in it in January, congrats. Amazing. Hopefully you took some profits, because we'll see if this area becomes support for these names. Again, that's kind of goes back to really the IPO, right? And it's not an IPO, it's because of the index, but the creation of the index in 2018. And you see this area was kind of like the support resistance VWAP from the first day. Look where price stopped at. Is that coincidence? You tell me, right? But it happened again. So now let's see again, nasty wick. I don't like that at all. All right. That's all I'm saying in this video is I don't like that. I don't like that. I don't like that. Again, maybe next month will surprise us. This one marched higher. This is utilities, and kaboom. With interest rates moving higher, why would people be in a utilities for a dividend when you get a higher interest rate buying bonds, right? And that's what is probably precipitating this move. And if this 64-ish area gets taken out, this can go. This can go. So utilities, nope, not a safe haven. XLP, 3 months down in a row. 1, 2, 3, right? 3 months down in a row. And so maybe it's just building out a shoulder, right? That's a possibility. And this can move higher. This is staples, right? But again, 3 months down, we'll see. Not my uber bullish look to it, right? XLP. Here's materials, XLB, and we have this toppy area right there, and I can easily put that right there, right? And so this failed, came down. We don't know if it's going to retest up here or not. Big indecision type candle both ways. If it breaks 77, look out below, right? But if we get back above 86, we could easily probably retest that $90 level. Obviously one of those either way. Again, so much indecision on these charts, right? I wish it was a little more clear cut. It's just not this month, right? This looks like a bear flag in real estate, right? That's pretty rough right there. A, B, and then potentially even C down, right? Let's see what that was. That's a 36%. And if this is it, 36% is, oh, look at that. Right to the low right there. Interesting spot, right? I'm going to actually draw just a little like marker right there just to see the A, B, C if that works out or not. You could be short real estate if it starts to break, some of these lows, 36, 35, then you could expect it pretty good fall right there. Let's look at bonds, BND. This is a Vanguard total bonds. And again, interest rates are rising and bonds are looking like mierda. Not good at all, right? So bonds are no place to hide. You will get the yield from it, obviously. So if you're looking for yield, bonds are a place for that. But this is, literally straight down. Look at that. And let's look at, just for fun, look at the 10-year. This is 10-year yield. So this is a monthly chart, 10-year yield. Let's go back. Here's the 80s, right? And something really significant has happened, right? So that's as significant as you're going to get right there. From the 80s, 80, 81, we'll call it, all the way down to here, bonds have been, the yields have been falling. And we got this breakout here. And that's very significant. And when we zoom in, this 5%. Now, last year when I was like on a Spaces and I said the bonds get to 5% yields, they were, somebody was laughing, right? And it was basically just based on the technicals of, back in 93 is at 5, 5-ish, right? 96 was at 5-ish. It dipped below, came back. Again, this has been very important all along. And now that we're, coming up here, boom, 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 nice little flag building once again, trying to break higher. I think between 5 and 5.3 is very, very possible and probably likely, right? Probably likely the way that this is looking. What's stopping it, right? I know the Fed isn't. They're helping it. And here's a dollar. I usually don't do these, but might as well look at them. You know what? The dollar at 120, what would that do to equities if the dollar gets to 120? Just think about that, right? What would it do? What were we like here in 01, 02, right? What happened to equities back here in 01, 02? They got demolished, 50% declines, right? That's the kind of stuff. NASDAQ down 50%. That's the kind of stuff that worries me, right? We'll see what happens here, but it's looking, here's February. It held where it was expected to hold, kind of dipped below and came back, right back. And so if this starts moving higher, that's a pretty significant move, 14%, but 120. If it gets up there, imagine what's going to happen to stocks and equities. Pretty rough. All right. Enough of that. Let's look at some individual names. Here's Apple. Apple, beautiful uptrend. No one can deny that. Beautiful uptrend. The question is this some sort of, and again, these are some view apps I have on there from shorter time frames. Is this a big rounding top in Apple? We don't know. It could be though, right? It kind of fits a rounding top look to it. A breakdown of 125, 120, somewhere around there. That could lead to a major decline. Major decline. That'd be really rough in Apple. So something to watch. Now, if we could break this dome and make a higher high, that's off, right? Now we're bullish again. But right now, it's there, that topping pattern. Again, Microsoft. So beautiful uptrend. And then you say, oh, it's a bull flag. I don't think this is a bull flag, personally. Again, look at the selling pressure in here. A lot of selling pressure. Do you see any of that selling pressure on the way up, right? You really don't. Maybe up here you see maybe a little bit as it's starting to move higher. And again, 2021, but then it cleans stuff up a little bit. But look at this type of selling pressure here. We haven't seen that in almost a decade. Yeah, 230-ish, maybe 220-ish, 215, 220. That there's a major support there. If that falls, I wouldn't be shocked if you could see 135, right? That's a major decline. Again, look how steep this peak is. Toppy right there. Look at that. That's Microsoft. Google. I mean, it's already been in the decline. We'll see, if 75-ish will hold, right? Um, you know, this looks more bear flaggish than anything else right here. If it breaks, 86, I think 74, 75 makes sense. So definitely Google's not one it's tough to be long Google right now. Amazon. Another one with that dome top, right? Being beautiful upwards. And then you kind of went sideways here. And it's not a bad look right here, right? Look how nice and tight this price action is. And that was, maybe some hidden distribution in here. And then Kaplawi, right? April 2022, you saw some big time, 23%. That's a big time, right? 11% in a month. Nice 27% bounce back, right? But then kaboom, 6, 10, 9, 5, almost 6, 13. Sorry. Again, nice big up month, but then another almost 9% here. VWAP from here is again not looking good. And prices underneath this general area, you have another one around $80, right? If price in Amazon gets below $80, you could see a pretty major decline, I think, in that particular stock. Again, that's the negative part. Again, if we get higher highs and higher lows, then it's a different story. Berkshire Hathaway. This one looks better, right? Again, we still have that general area. There have a lot of banks and railroads and things of that nature, and oil names and all that kind of stuff. We'll see. 5180 on this is the BRK.B, I think is what I'm looking for. Yeah, BRK.B. That's what I usually use. There it is. Berkshire B, 265, right? That's the part that's got to hold. I'm going to get rid of that right there. It doesn't help me much. I think 265's got to hold. If 265 doesn't hold, 224 is the next level. Again, it's more like a conglomerate, right? So it's got, almost like ETFs with railroads and all the different pieces and the insurance companies and banks and everything else in there. But it's, again, high, lower high. That's what I see. Right, it needs to make a higher high for me to say things in all clear. Tesla. And also, if a bear market is going to continue, just so you know, there's no place to hide except in cash. Maybe if you want yields, put your money into a CD or bonds or whatever. Even bonds can go down, right? If the yields keep going higher. So, in a bear market, everything goes down. A true bear market. There's Tesla, and we have the top, like we talked about, and we've seen it in Apple potentially. We saw it in Amazon, and you see it broke down, kind of came back pretty strong. There's your VWAP, right? And now there's your dome, and we'll see. Does it get rejected here and take out and get below 100? If it gets below 100, Tesla, right? I mean, probably. I mean, it could go pretty far. It could go real far. So, then again, it's not going to go in a straight line. Probably not, at least. But it can. Be careful. Just be careful. Again, I do like that there's a good bit of volume that came in on these up days. And listen, if it gets above 210, 212, 212 we'll call it, then cool. Awesome. You know what? Either it needs more time or it's just going to go higher, and that's fine too, right? But as of right now, it's in that indeterminate area. Nvidia, good looking chart right here. kind of broke out above this area, which looks good. I think there was some news actually today after hours, so we'll see how that responds to it tomorrow. And I didn't read the whole thing. It wasn't like an offering, but there's something going on with the stock after hours today. But I like the way this looks, right? So okay, there's one that says it looks good as long as it's above, 195, right? Then Tesla's reasonable. I mean, sorry, not Tesla. Nvidia's reasonable. Here's a VWAP of interest. It held all this, right? So we'll see. We'll see what happens. But again, we have our line in the sand, so not bad at all. What else we have here? Meta. Oh, Meta. The old Facebook, right? So this is the VWAP from the IPO 2012, and it cut below it and then came back. Had a couple strong months, 4 strong months in a row, and it is above the VWAP from this day right here in February a year ago. That's always a positive. We'll see what happens with it, right? Again, it got back above here pretty quickly, so that's the positive for Meta, right? A quick dip, then move higher. That's the positive. Maybe some resistance coming into 215 if it does continue higher. That'd be interesting. If it breaks back below 119, right? Anything below 119, I think that's a problem. So again, that's a pretty wide range, and we'll see what it does. It could just chop sideways too. But again, this one looks a little bit better the way it has reacted the last 4 months. Here we go for Visa. Yeah, not bad at all, right? Had this kind of downtrend line that we drew in there, and it broke it to the upside back in November. And I'm going to just get rid of it now because I think we go more horizontal-ish here, right? So that's what it looks like to me. It's got to get above 247. 247 is the key. If it gets rejected here, I wouldn't be surprised if he goes all the way down to 150 again. That wouldn't shock me at all, especially if we start seeing people lose jobs or defaults, right? People that being able to pay their credit card bill. I saw something today from, I think it was a Kobaleski letter that said basically, we've seen credit card balances increasing the last, I think it was 4 or 5 months in a row, pretty significantly. So I don't know, that's the macro stuff. I don't know. But if we start seeing Visa, people not being able to pay their Visa bills, then that could be a problem, right? But for that to happen, I think people would have to start losing their jobs. And again, we're only seeing that in the tech sector right now. We're not seeing it in the broader economy. If we start seeing in the broader economy, that's a different story. Healthcare didn't look so hot, and let's see, United Healthcare, the largest healthcare name out there. Yeah, it doesn't look that great either, right? Down 4 months in a row, and coming into this very special place, we'll call it 445 or 450. It's only $25 from there, and then if it breaks that, it could go, obviously pretty far down. But maybe it's just moving sideways, so we're going to hold our judgment for now. But definitely watch that 450 level, right? It's kind of what monthly charts does. Again, it shows us these bigger levels to watch. Next up is XOM, right? Oil and gas look toppy. And XOM, even though oil and gas, XLE, looked toppy and got rejected at its resistance, XOM, ExxonMobil, look at that. Broke out here. This was back in October, and basically has gone sideways since. And this now, I'll get rid of these arrows, right? This now has kind of held, and this VWAP held from the breakout, right? Again, on the monthly, it has held. So we don't know if that's going to continue to hold or not, but that's a place that we can, potentially manage risk against. And even more importantly, this 102 or even 100 area, right? That 100 area. So if we come back and retest the 100 and it holds, XOM could be something interesting. And if chances are if XOM is going up, XLE is probably starting to break out as well. Again, XOM is ahead of XLE because it's already broken out. We'll see if this continues to, again, maybe it comes back in a little bit more, hold, and then we go higher. We'll see. It does have earnings coming up. That's in March. We got some time. All right, let's keep going. Is that March? When's earnings? No, April. April. So yeah, I don't think there's many earnings in March at all. Anyway, so let's go to Taiwan Semiconductors, right? So Nvidia looks pretty good. Let's see what TSM looks like. So again, kind of tops back here, and it's had a really good March lower for almost a year. Bounce back, pretty strong there, pretty strong there. Um, yeah, so again, has a hard time getting past this $100 mark, right? Really, real hard time with this $100 mark. And so we're seeing some weakness there. Again, is this some kind of bear flag? If we take out 73, chances are we're going down to the $60 area. If we lose 60, 46, right? That's a 50% move. Again, so the idea that a 50% move is out there, we have to be open to it, but not be overly bearish, because right now it's just one of the possibilities. But there's definitely room for that. 33 and then 50, right? Yeah. JP Morgan. JP Morgan looks okay, right? I mean, that looks probably the best chart we've seen tonight, maybe. It's back to this area, which was prior, right? And it's trying to break out from this area. It looks okay, JP Morgan. So it's kind of hard to get too bearish on the economy if you see JP Morgan moving higher. That's just what it is. Not too shabby at all. We'll see if it can continue, or if it gets into this 149 area, if it meets some overhead supply. Excuse me. Sorry. All right, let's keep going. J&J. Oh, already breaking down. Healthcare is breaking down. Look at Johnson Johnson, right? Look out below. That's not a good look, right? That's a waterfall look to it. The start of a waterfall look. Healthcare doesn't look good. Johnson Johnson not good. Walmart holding up, but again, kind of indecision. This looks like it wants to roll over. I know I shouldn't be, I feel like everything is bearish, but it's just the way it looks like. And then again, maybe it's my own bias playing a role into here. Again, there's our indecision candles in general, and it couldn't move higher or lower. But man, watch out if 138, breaks. 138 breaks. We're in this 100 level, maybe. That's a pretty good move, right? There's that 30% move. I think 30% comes before 50%, right? There's that possibility in a lot of these charts. A lot of these charts have 30% moves that could happen pretty easily. MasterCard, looking at kind of like this area, tried to break down, couldn't, came up, tried to break out here potentially, and maybe just comes back down to this 300-ish level, and then comes back around, chops around, and goes sideways. That's a possibility. It's not doing anything wrong, right? The only thing, look at this price action, right? Again, nice, tight, boom, March, beautiful price action, right? Look at this price action. It looks nothing like this. Nothing like this, right? This is sloppy, nasty price action, right? Sloppy, nasty price action. Loose, ugly. There's no other way to describe that. This is nice, beautiful price action. Okay, you tell me what this looks like compared to this. Procter Gamble, again, more of a staple name. This is again, this is the price action we're looking for, right? Does this look like this? Hard to say it does. Let's just keep going. CVX. Again, kind of sloppy. And again, I'm always looking for kind of like these widening patterns, and you can kind of see it. Sorry. Something like that. Look at that choppy. yeah, again, not a fan of that look in general. Just not really a fan of that. Home Depot, we're almost done. Again, peak back here. Lots of VWAPs on this one, huh? Yeah, different VWAPs for different reasons. But either way, this 263 is a major area. This has a bearish look to it. 263 breaks. We can then obviously get down to 207 potentially, or even potentially even lower than that. So Home Depot looking a little, rough as well, right? See these wicks? Not a fan. And the last one will be Eli Lilly. Again, this is one that I was in at one point. Just try to get rid of all that stuff because there's no reason for it. So kind of look toppy over here. It came back, lost this VWAP. Next stop will be this area right there. It does have a great drug called Mounjaro that's selling really well. Who knows if it's meeting its projections or not? I don't know, but we do have 3 months in a row down. 300, that's the key area, 295 to 300-ish. That breaks, things can get kind of nasty from there. Remains to be seen. Okay. So there you go. That was monthly charts. Definitely a lot of caution on these monthly charts. At least that's the way I see it. And again, the way that SPX breaks up or down from here, I think that will trigger all those other monthly charts to also either, move sideways up or potentially break down. And those breakdowns, I mean, they could be severe, right? They could be a 30% to 50% breakdown if things start to break down again. That's just the way I see it. Maybe you guys see it differently. Leave me a comment below if you do. If you like this type of video, like and subscribe to my channel. You know the drill. I do appreciate that, as always. Hope you all are doing great. Take care. Bye.